Thank you, and welcome to the Briefcase, where we talk all things business, investing, and real estate. Today we'll be talking about land and how it's misunderstood and how it's used by millionaires. Let's get into it. There's a strange paradox in real estate. The most valuable deals often start with absolutely nothing. No tenants, no buildings, and no income. Just dirt. And yet, some of the largest fortunes in real estate have been built not by owning skyscrapers, but by understanding land before anything is built on it. Because here's the truth: buildings generate income, but land creates opportunity. And if you understand how to see that opportunity before everyone else does, you're no longer reacting to the market, you're shaping it. Today we're breaking down the land, the most misunderstood, underestimated, and quietly powerful asset class in commercial real estate. Why land is different. Let's start with what makes land fundamentally different. Every other real estate asset, whether it's office, retail, or multifamily, has one primary function. It produces cash flow. Land doesn't, at least not directly. There's no rent check coming in, no tenants to manage, and no immediate yield, which is exactly why most beginners ignore it, but professionals don't, because land operates on a completely different axis. It's not valued based on what it is, it's valued based on what it can become. That's a massive shift in thinking. When you buy an apartment building, you're analyzing current income. When you buy land, you're analyzing future potential. And that requires a very different skill set. Now, for the four types of land. Not all land is created equal, and this is where most people oversimplify. There are four primary categories. Number one, raw land, completely untouched. No utilities, no roads, and no infrastructure. This is the highest risk and potentially the highest reward. Why? Because you're starting from zero. Every improvement adds value. Number two, unimproved land. This is slightly more advanced. Maybe it has road access or nearby utilities, but still not fully developed. Think of it as almost usable. Number three, improved land. Now we're talking infrastructure. These are where utilities are connected, roads exist, and land is build ready. This is where developers start paying serious attention. Number four, infill land. This is the hidden gem. Land located within already developed urban areas, surrounded by existing buildings. It's scarce, it's competitive, and it's often extremely valuable because there's one thing they're not making any more of: location and land. Then comes zoning. This is the invisible value driver of land. If land is the canvas, zoning is the rule book. And this rule book determines everything, like what you can build, how tall it can be, how dense it can be, and what it can be used for. Two identical parcels of land, same size, same location, can have wildly different values based solely on zoning. Let me say that again. Zoning can create or destroy millions of dollars in value without changing a single inch of the property. That's how powerful it is. And here is where it gets interesting. Sophisticated investors don't just buy land. They buy land with the possibility of changing its zoning. Because with zoning changes, value can jump dramatically. This is called zoning arbitrage. And it's one of the most advanced and profitable strategies in commercial real estate. Next comes entitlements. This is where money is really made. If zoning is the rule book, entitlements are the approval process. This is where deals either become extremely valuable or fall apart completely. Entitlements include zoning approvals, site plan approvals, environmental studies, and permits. It's a long, complex, and often frustrating process. But here's the payoff. Raw land becomes significantly more valuable once it's entitled. Why? Because uncertainty disappears. Developers aren't just buying land anymore, they're buying certainty. And certainty is expensive. Some investors specialize entirely in this phase. They buy undervalued land, navigate the entitled process, and then sell to developers at a premium. No construction, no tenants, just strategy. Now, let's talk about raw land versus improved land. Let's simplify a key distinction. Raw land is about potential. Improved land is about execution. Raw land requires vision, patience, and risk tolerance. Improved land requires capital and speed. Professionals choose based on strategy. Want higher upside? Raw land. Want faster deployment? Improved land. There's no better, only what aligns with your goals. How developers analyze land. Now let's take a step into the mind of a developer. They don't look at the land and ask, what is it worth today? They ask, what can I build here? And what will it be worth? Then they work backwards. This is called residual land value analysis. Here's the simplified version. Step 1, you estimate future value of the completed project. Step 2, subtract construction costs. Step 3, subtract financing, fees, and profit margin. What's left? That's the land and what it's worth, not based on comps, based on math. The highest and best use. This is one of the most important concepts in all of real estate, and it's surprisingly simple. What is the most profitable legal use of this land? Not the current use, not the previous use, but the optimal use. Maybe it's currently a parking lot, but the highest and best use might be a 12-story mixed-use development. That gap is where the opportunity lives. Land banking. Now let's zoom out. Not every land investor is trying to build immediately. Some are playing a much longer game. This is called land banking. Buy land in the path of future growth. Hold it and wait. As cities expand, infrastructure improves, and demand increases. The land becomes more valuable over time. No development required, just patience and foresight. Risks nobody talks about. Let's be clear. Land is not easy money. It comes with real risks. No income equals holding costs, zoning uncertainty, environmental issues, and market timing. And perhaps the biggest one, time itself. Land deals can take years to fully play out, which means your capital is tied up with no guarantee returns. This is why land investing favor those who think long term. And thank you for watching the briefcase today. If you found any of that information about land confusing or insightful, please make sure to comment down below. And if you enjoyed this video, make sure to like and subscribe. Now remember, stay smart.